Welcome back to Wall Street Silver. We have a wonderful guest today, Mr. James Turk. Though he is the founder of Gold Money. Thank you for joining us, Mr. Turk.
It's great to be here. Thank you.
So, Mr. Turk, you wrote a great book called The Money Bubble. And in that book, you say, because the money bubble involves the world's major currencies rather than just a discrete asset class like houses or tech stocks, its bursting will both be far more devastating for the unprepared and far more profitable for those able to understand it and act accordingly. I'm assuming that bubble has not popped yet. Where do you see us in the stage of this bubble? And where are we going over the next 6 months to a year?
Yeah, it hasn't popped yet because not everybody has wakened up to the fact that the system that we're presently operating under has a limited life to it, and that eventually we're going to go back to precious metals. Governments will either do that voluntarily, by choice, or they're going to be forced to do it by the markets. But it is a money bubble because when you're in a bubble, people are saying and doing things, and it's accepted as conventional wisdom, even though it's incorrect. And the money bubble is that people think that the paper dollar is money, when in fact it is not. Gold and silver are money. They're a tangible asset. Paper is not money, it's just currency. But people don't understand that now, but they will understand that when the bubble pops. And I think it's going to happen fairly soon.
To that end, you also correctly called the housing bubble back in 2007, 2008. Do you see us in a similar condition with housing and real estate in general?
Yeah, I do, but it's much bigger than that. It's, just basically people use debt. They see debt as an alternative to savings. And that's the corrupt system that we're operating and living under today. And it's unfortunate that we've gone off into this tangent. We're in an aberration from normal monetary history. But we've seen these aberrations occur time and again. We've never seen it before, going back to the original question, on a global scale like we now face. It was almost a global scale in the early 1700s when the Mississippi bubble popped in France, and the same time the South Sea bubble popped in Great Britain. But today, it is truly global. And I guess the best way to explain it is imagine what Venezuela is going through now and looking at that on all countries around the world as they struggle to come up with currency for use in economic activity.
You just mentioned how this might be and how this will end, whether they do it voluntarily or the market will force them to go back to precious metals. I mean, I have my own opinion about that. I don't think they're going to do it voluntarily. But how would that actually work in your mind? How does that function where the market forces the sovereign nations of the world back to precious metals?
Well, let's look just at the United States, because there the path is clear. We've gone through this experience once before. The first currency of the country collapsed. That was the Continental after the War of Independence. And what the framers of the Constitution did is they put us back on a sound monetary structure by having gold and silver. The silver dollar actually being the numeraire, the first currency of the country, put us back on a sound monetary footing. And that existed for almost 170 years until Nixon took us off the gold standard. In contrast to, say, Germany, which went through a similar currency collapse in the 1920s. They went the wrong way. They went to fascism and socialism. And we all know what the consequences of those were. So the path is there. We've seen it before in history. All we have to do is go back to what the framers of the Constitution understood, follow the letter of the law of the Constitution, and that's the path. The question is, are we going to do this peacefully, or will there be a lot of disruption and chaos?
Well, I mean, I don't see it. The current powers that be in the Fed, all the PhDs there, I don't believe it's in their DNA currently to believe in precious metals. Would you agree with that?
Yeah, I agree with that 100%. They're basically statists, and they live on their own power. And as a consequence of that, the individual liberty is being threatened by the monetary system as it's presently structured. But the Fed has this position of privilege and power, and they're going to do everything they can to keep it. But what's happening to keep that power, you're seeing more and more and more controls on people's ability to make choices in their own lives, particularly with regard to money and finance.
What would be the market mechanism that convinces the current powers that be that fiat currencies no longer are viable and we have to go back to some form of sound money with, some sort of gold standard and some revalued gold and some new currency? What was, do we just have to go through the valley, some major economic depression that just wipes out the current people who are running the show to bring some new people to the forefront who could make these decisions? Or, how do you see that playing out? Or have you given any thought to it?
Yeah, I've given a lot of thought to it. And obviously we cannot predict the future, but we have views as to how the future will unfold. I think we already know what the future is going to be because the market always has the solutions to any problems. Cryptocurrencies have emerged because fiat currency is ineffective. That's why Bitcoin is at $40,000 a coin. People would rather own Bitcoin than own US dollars or euros or any other national currency. So the question is the market will continue to move in that direction and create alternatives to government-sponsored fiat currency. Now, is cryptocurrency a long-term solution? I don't think so. I see cryptocurrencies as a stepping stone to educate people, particularly the millennial generation. In contrast to myself, it's a boomer generation. I used silver coins when I was growing up as a child in Ohio. The millennial generation and after the boomer generation, all the other generations have not had the opportunity to use silver coins, for example, as currency. So I think ultimately we're going to go back to gold and silver, but cryptocurrencies are providing a stepping stone by educating people that there's a better alternative out there than fiat currencies.
Understood.
Cryptocurrencies, in other words, are not the long-term solution. They're just a short-term solutions to get us back to gold and silver.
Well, do you think some sort of, there are several different sort of digital tokens that are a crypto backed by gold and silver that I guess combine the benefits of both. Do you see that as a possible way this goes?
Yeah, it is possible. It's impossible to predict how the technology is going to develop. When I established gold money back 20 years ago, we created and had the patents on what was called a digital gold currency. And basically the gold just stays in the vault. And when you click the ownership from you to someone else, the gold stays there, but the ownership transfers. So it's effectively using gold as a form of currency. And in my mind, that's better than any gold cryptocurrency. But, the market chooses to use that as a form of savings rather than as a form of currency, going back to Gresham's law, which is, bad money drives good money out of circulation. So you save the good money and you spend the bad money, which is fiat currency. But ultimately, Gresham's law will disappear when only gold and silver circulate as currency.
James, you talk about using silver as currency as a child. I mean, I'm a little bit younger than you, but I do remember finding silver coins in my change every so often. Back then, a quarter could buy an awful lot more than it can today. If you took just a regular quarter, which is now copper. We talk an awful lot about, the price of silver going forward and making an explosive move. But when you agree that it's the purchasing power that really matters, and how do you see that?
Yeah.
Do you see the purchasing power greatly increasing as people come to realize that silver and gold are actually money?
Yeah, that's exactly right. You can't calculate things anymore in terms of dollars or euros. You have to calculate in terms of purchasing power. And let me give you a good example. Growing up as a kid in the 1950s, my parents could drive the family car into the local gas station, and with $4 half-dollars or 8 quarters, they could fill up the tank, silver quarters or silver half-dollars. Today, if you take the silver in that same $2 worth of silver coins, you could still fill up the family car, but $2 doesn't even buy you a gallon of gasoline. So what you have to calculate is the price and not the purchasing power of what you're using in order to acquire goods and services. And over time, gold and silver preserve purchasing power over long periods, which is why they became money in the first place and continue to be money today, even though the government has forced them out of circulation.
So do you think that, the relationship of buying power, say of 100 ounces of silver today, is going to be a lot more buying power in 5-10 years after this money bubble pops. And I'm assuming we're going to have some asset deflation for things like, real estate and other items.
Yeah, that's exactly right. There are a number of answers to your question. First of all, when you have silver coins in your hand, you have money that does not have counterparty risk. In other words, it's not dependent on some government's promise. It's not dependent on some bank's promise. It's dependent on the market's use of silver as money for thousands and thousands of years. And we have to assume it's going to remain money for the foreseeable future, and we'll continue to hold buying power. When you talk about deflation or inflation, you have to, again, go back to how you're calculating it, what currency you're using to calculate the inflation or the deflation. So if you look at the price of real estate in terms of dollars, there will be inflation, just like we see the stock market going up because of inflation. But if you calculate in the future the price, what will happen in the future, the price of real estate or the stock market in terms of gold or silver, you will see deflation. In other words, the purchasing power of your gold and silver coins will increase because of the deflation in gold and silver terms of a decline in the price of the stock market or real estate. So your purchasing power will increase in the future by holding physical gold and physical silver. And I always make the point, don't take representations for gold or silver, actually hold the real thing, physical coin, physical bars.
Well, Mr. Turk, with the current macro environment of negative interest rates in most of the world, negative real rates right now, a completely dovish Fed that can't raise interest rates, massive deficits, record levels of debt. Are you surprised gold and silver are not at all-time highs right now?
Well, yes, that it's taken so long for them to finally break out and go to new highs, but no, in the sense that, back in 1997, I started writing about the manipulation of the gold and silver market. And it comes back to the point that you're talking about interest rates. If you're going to manipulate interest rates for the US dollar or any national currency, you have to start by manipulating the interest rates for gold. Interest rates are a reflection of a couple things. Time preference, obviously, by foregoing something today and for spending in the future instead, you're entitled to some kind of compensation in the form of interest income. But gold, because it cannot be debased by central banks or artificial means, it has a lower risk, which is the other important part of interest rates. The higher the interest rate, the higher the risk of the currency. That's why the interest rates in the South African rand are much higher than the interest rates in the United States. The South African rand is a higher risk currency than the US dollar. So in order to control US dollar interest rates, you also have to control gold interest rates and silver interest rates, which means you have to control the gold and silver price. And we've seen gold and silver manipulation now for over 2 decades, but you can't hold back the power of the market. No central bank is powerful enough. No cartel of central banks are powerful enough. We saw that back in the 1960s with the collapse of the London gold pool in March of 1967. They could not keep gold at $35 an ounce because gold was tremendously undervalued. It's like gold and silver are today tremendously undervalued. Eventually, they're going to let loose. It's just a question of time when the governments finally run out of the power to keep the lid on the gold and silver price.
James, you talk about manipulation. A lot of people in Wall Street Silver obviously believe that the markets are manipulated. We've heard guests here think that it's one-off manipulation. Do you think there's a systemic manipulation that's coordinated through the central banks to suppress the price just to kind of hide inflation, or do you think it's just the occasional banker manipulating the price? What's your view on the manipulation?
No, it's definitely systemic, and it comes from the U.S. federal government, and it's done in order to maintain the dollar's unique position as the world's leading currency. The manipulation is there because gold and silver are natural money. They're the natural competitors for fiat currency. So if you see a rising gold price like occurred back in the 1970s or in the early part of the century, people start to worry because they recognize that there are financial issues, either bank problems or derivative problems or inflation or credit risk problems. And that causes them to flee national currencies and go into the safety of precious metal coins and bars. So it's an active manipulation, no different than what occurred in the 1960s, except in the 1960s, the US government dishoarded 10,000 tons of gold from Fort Knox to try to maintain the fiction that gold was worth only $35 an ounce, but the market knew better. And eventually in March of 1967, the London Gold Pool, led by the US government, had to throw in the towel, admit defeat, and stop manipulating the gold price, which over the next 10 years arose from $35 to over $800. So it gives you an indication of what the potential is like for gold and silver in the future once this manipulation finally ends, when the US government finally throws in the towel. But you have to recognize that the federal government, through the Federal Reserve and the Treasury, to maintain this special position that they have, all the power that comes from creating the currency of the world, they're fighting for their life. But the interesting thing is that gold always wins. Just look at monetary history. Gold's been money for 5,000 years. It won in 1967, it won in the 1970s, it won in the early part of this century. It's going to win again. I don't know when that's going to happen. I think it's soon, but it's definitely going to win again.
Is there come a point where there's just so much physical drain from the market that it's just no longer possible to maintain this paper leverage game? Is that the strategy here, to bring this to to some sort of end point, some sort of climax? Just keep taking physical off the market from you see PSLV buying the 1,000-ounce bars with Rick Rule and his group, and you see the retail level Wall Street Silver buying, creating a new generation of stackers. Is that's the way to bring this to an end, is just taking the physical off the market?
Yeah, there are two answers to your question, both at a macro sense and in a micro sense. In a macro sense, by removing all of the physical gold, it's going to be, or silver, it becomes harder and harder for the price manipulators to manipulate the price, because most of the manipulation is done with propaganda in order to focus the demand, keep the demand for the dollar high and the demand for precious metals low. But occasionally they're forced to put some physical metal into the market in order to rebalance it, like they were earlier this year. Now, and in that environment, I think that they probably rate SLV, which is why if you're going to buy an ETF, I always recommend buy PSLV, which is the one you mentioned, the Sprott Physical Trust, or if you want physical gold through an ETF, buy PHYS, which is Sprott Physical Gold Trust. So that's the macro sense. But let's focus on the micro sense, which is why you're stacking. You're stacking in order to protect your own personal wealth, your own personal purchasing power, so that you're prepared for an uncertain future. And whatever comes, you will be ready for it, because you're basing that decision on something that has a 5,000-year track record.
James, do you have any advice for the Wall Street silver community in terms of how to accumulate silver? Do you have any advice in terms of squeezing the markets so that we are taking enough off so the price discovery does happen on its own?
Well, that's a tough question. First of all, everybody's circumstances are different. So it's hard to make a general view or general recommendation that applies to everybody. But the way I typically respond to that question is that, everybody has a budget. And at the end of the month, you have a certain amount of money left over that you can save. That's your savings you want to accumulate for the future, or you want to invest it. I recommend that you look at the different alternatives of accumulating gold and silver with one common denominator. Always buy physical, either buy physical coins and bars or buy ETFs that have physical gold and silver in them, like the two Sprott ETFs. But I think you guys are doing a great job, because let's assume that I'm correct and that the dollar does collapse, which is what monetary history suggests that eventually will. The people who follow your advice are protecting themselves and their families and their friends by accumulating and stacking what has been money for thousands and thousands of years, and what is going to continue to preserve purchasing power through the next crisis, just like it has at every crisis throughout monetary history.
if the dollar were to collapse, is that a gradual process like we've seen over the past, the dollar's lost 97% over, since in the past 100 years. We've all seen that graph before, but some would argue it already has collapsed, over the past century. Or are you referring more to a sudden collapse, as in within a period of months or weeks? How do you envision a dollar, let's call it a dollar reset?
Again, monetary history provides the examples. The Roman denarii, it lost purchasing power for 100 years until it fell off the end of the table. So if we say that the Federal Reserve dollar is now 100 years of debasement, it's about ready to fall off the end of the table, I think that's probably a pretty good indication. The question is, though, how long is it falling off the table? When is it going to happen, which we don't know. And when it does fall off off the end of the table, how long before it becomes worthless? In that regard, it's typically 6 months. Once the tipping point is reached, once nobody believes, the Federal Reserve anymore, once the federal government deficits have become too big that everybody understands that that debt is never going to be repaid, and the dollar is going to be debased and lose purchasing power to make it easier for the U.S. government to renege on its debts. Once that point is reached, you've got typically 6 months. But that's historically. Today we've got much more modern communication, and the word is going to spread much more quickly. So it's probably going to be much less than 6 months. It could be maybe 6 weeks, could be several months, but it probably won't be more than 6 months. It'll probably be a lot less once that tipping point is reached. And what we have to watch for is that tipping point will be characterized by disbelief, a Federal Reserve pronouncement that people laugh at or just ignore and start to move in other directions. It could be like March of 1967, when the federal government threw in the towel and said that they could no longer sustain the London gold pool. There will be some event that is the tipping point. It'll be easier to view the tipping point after it's reached rather than trying to predict what it will be. But I think it'll be pretty clear when it happens.
I hear what you're saying, especially with social media, whether it's Twitter or Facebook or, whatever platform, or all of them combined, the way information gets around the world so quickly within days. Like Jay Powell's statement the other day, his incomprehensible explanation of inflation and transitory. I mean, it's just being ridiculed on Twitter nonstop right now, at least among the people who I follow on Twitter. And I can't help but think that you're right, that once this gets going, it's going to be pretty quick in terms of the confidence. It's a con game, right?
Yeah, and I think what you want to watch for is when the Twitter police start banning people who talk poorly about the U.S. dollar and its prospects. That will probably be the tipping point.
Oh God, my account's going to be one of the first ones that's gone. That'll be the tipping point. When the Wall Street Silver Twitter account is suspended, the collapse shall commence.
I see that happening pretty quickly when it does. It'll just take everything down at once. Yeah. So James, let me ask you a question. You've been following this market for a very long time. You've closely watched the Fed and other central banks. I mean, is the World Economic Forum talking about this great reset kind of them waving a white flag saying the game is over and we're just going to move to something else, and they're trying to get ahead of it by talking about the central bank digital currency and all these other measures?
Yeah, I think they are. I think central banks see the writing on the wall. Although they're pretty boring people, the central bankers, and don't really tell you the whole story. They only tell you what they want you to hear. I think they clearly see the writing on the wall. They know that they have a limited shelf life based on this present system, and they're trying to figure things out to maintain their position of power and privilege in the face of what they see as new threats, but I see as creative new innovations, like cryptocurrencies and some of the different gold products that are being developed that encourage the ownership of physical gold and physical silver. So yeah, there will be a reset. And, that's what I talk about, the collapse of the currency and the tipping point. I just wish I knew when it was going to happen. I've been, on this battle now for 20 plus years, even more really. But it will happen if monetary history is any guide. And there's no reason to suggest that it's anything but an excellent guide, as is logic and reason.
Well, Mr. Turk, I want to thank you very much for joining us and giving us your take on these issues. I'd love to have you back as this year develops and get your thoughts as, maybe the next 2 or 3 months we'll have you back and see how things are going and see how much closer we are to that tipping point.
I'd be happy to do it. And thank you very much for the invitation. It was very kind of you.
Thank you so much, James. Appreciate it. It's been great talking to you, and stay safe through all the craziness that's probably ahead.